Hello, this is Siwing Yi. Today, I'm coming with you some very timely, urgent news as provided by Black Knight about the housing prices rising after several months of declines. Before I do that, as always, if you see value on this presentation, please smash the like button and also subscribe to my YouTube channel, and also quickly visit my website below and drop your email into the form to subscribe to our weekly turnkey real estate investor newsletter. Without further ado, I have a lot of great things to share as always and very timely news. And I'm going to go over the mortgage news daily information first before I will go over the main article of my presentation, the Black Knight. As you can see down here, the mortgage rate has increased another 0.07 basis point today, which is 4 April of 2023. And today is Wednesday, I believe. 30-year fixed rate mortgage for those people that have excellent credit. The 30-year fixed rate mortgage for conventional loan home buyers, primary home buyers, is 6.37%, which is very news because even towards the past 6 days, a week ago, the Mortgage News Daily reported that the rate was 6.6 on 28 March, 29 March 6.61, March 30th 6.59 then, and the rates has slowly decreased all the way down to 6.37. We can expect some very robust housing activity because right now is a spring buying season on historical annual basis. The hottest part of the historical spring buying season is April and May. As a matter of fact, the second week of April, for the next few months, you expect a lot of activities. And again, this is a seasonality basis. I know this kind of information I'm sharing today, lagging indicator, but around 45 days from now, once all the information has been updated, then we will reflect back on the housing activity that has occurred in April and then May. I believe we expect positive news. But as you can see, the Mortgage News Daily is the blue color dot, and you can see right now it's really nice rate, 6.35%. Back in February 2nd, we have seen we see 5.99% threshold. That really create a lot of momentum. That was back in February. Then it went back up again into the mid sixes. Then back in October of last year, we have seen rates as high as 7.29%. And that was a very challenging time. From October until now, a mere October, November, December, January, March, 6 months later, the rate fell from 7.3 at the peak, as you see right here, to right now 6.37%. But of course, that's nowhere near what happened year over year last year, because last year at this time in April 2022, the rate was 4.84%. In a mere 1 year, the rate has dropped 1.53%. Welcome to the new normal, but the still good news. We have to take advantage of this low 6 mortgage rate, and a lot of people are coming off the sideline. So there's a very good sign. There's a housing frenzy going on. I see many of the markets, especially at the entry-level homes, as I speak to our network realtors in many markets that I associate with, especially in the Sun Belt areas of the Western region and South and Southeast. I speak to the local realtors quite on a daily basis, as a matter of fact, and they are saying the entry-level homes, the homes that are below the medium price range, whatever the medium price range in their local market, in those markets, and they are seeing multiple offers, 5 to 10 multiple offers on homes that are priced correctly according to the market condition. And those homes that are in good location, that are turnkey homes, they are selling like hotcakes. And we are seeing bidding wars like 5 to 10% above the final list price. And we're seeing around 5 to 10 offers per house in those markets, entry level, below the median price. That's what's happening right now. Without further ado, let's go back and go over the main article of discussion, which is the Black Knight. This article just came out April the 3rd, 2023, and the headline is February home prices see first monthly rise after 7 straight declines. A sales pickup on low rates while inventory shrinks even further. Okay, we can discuss that quite extensively because this narrative, these three words, inventory, the two words, inventory shrinks further, is very problematic, it's very troubling in a good way for those of you that want to get off the sideline. Let's dive deep into the article right here. Black Knight said home prices rose in February on both non-adjusted and seasonally adjusted basis, driven by a combination of modest easing affordability in January and early February, along with the worsening inventory levels. You're going to hear this quite often. Worsening, lowering of the inventory level, supply and demand, economics 101. When pent-up demand are greater than the supply inventory, typically, then we can see a robust housing market. Okay, so don't even think about the word crash, but 5 to 6 months is a normal, healthy market supply inventory level. And right now we are seeing around 3% or lower than 3% supply of inventory in many markets in the US. In some markets, the inventory level are even below 2 months, which is mind-boggling. The second paragraph, this is what shared right here. Sales were up in a month on the interest rate dips, according to collateral analysis data from Black Knight, but remain 18% below 2019 pre-pandemic averages as affordability pressures continue to weigh on demand. Inventory levels continue to deteriorate with the seasonally adjusted number of homes available for sale falling to the fifth consecutive month to the lowest level since May of 2022 last year. Before going further, of all the homeowners out there in the US, 40% of the homeowners have no mortgages. They are debt-free and clear. The other 64% of the homeowners who have mortgages, they are locked in at a historical 4% or below on a historical low rate, because many of these individuals bought a homes back in 2 years ago or prior. Many of the homeowners back in 2021, they have refinanced their home to a once in a lifetime, once in a generation, lowest historical mortgage rate ever. And those people, there's no way they're going to give up their 3% historical low mortgage rate to move up to buy a new house that costs more, not only costs more, but the mortgage rate itself is in the mid-sixes. This means their mortgage payment could be double if they were to sell their current home. So many of the homeowners have a lock-in effect. They're not moving. They're not selling. That's the one reason the inventory level is so low, which is out there. Adjusted for seasonality, prices were up 0.16% in February, the strongest single month gain since May of 2022, while at the same time at 1.94 annual home price growth fell below 2% for the first time since 2012. That means for the past, ever since last summer, when the mortgage rate skyrocketed, we have seen month over month for 8 straight months of home coming down. And this past February, the home prices have gone up for the first time since last summer. This is a very significant turnaround of news. Let's get back to this article. More noteworthy, 39. Look at this. This is truly amazing. Let me highlight this for a moment. 39 of the 50 largest U.S. markets saw home prices rise on an adjusted basis in February. That's a sharp contrast to this past November when prices were falling in 48 of 50 markets. February's national increase in home prices up 0.116%, adjusted for seasonality, marked the first positive monthly growth we have seen in 8 months, said Walden. Daily transaction info from Black Knight's collateral analytics and our low rate lock date show that the purchase market increased when rates declined in the early part of the month, and borrowers were quick to take advantage of the limited inventory. In many areas of the country, that dynamic, low inventory on a modest rise in demand, led to an uptick in home prices. All in, 39 of the 50 largest U.S. markets saw prices increase in February, in sharp contrast to just 3 months earlier when 48 of those 50 markets were experiencing price decline. Right now, we have better affordability because today's April's mortgage rate is 6.38% according to Mortgage News. Because of the lower of the rates recently, we have seen better affordability for many consumers out there. Amid we still see larger inventory deficits. Here we go again. The unfortunate reality is that the scarce supply of inventory that is a source of so much market gridlock isn't getting any better. What does it mean or not getting better? Let's say we have a 3 months supply of inventory nationwide. Let's say that we're close to it. This sentence I just read to you, that inventory shortage is not going to get any better. This means if the pent-up demand continues to increase, if the mortgage rate maybe go below 6.3% that as of right now, the pent-up demand going to skyrocket, but the supply of inventory going to remain at a historic low. It's going to go beyond 3 months inventory. So this is so we might have a mini bidding war. Who knows? We may have a post-pandemic real estate boom 2.0. I don't know. I don't want to exaggerate. I don't have a crystal ball. The largest inventory deficit we have seen since May of last year, more than 90% of markets seeing such deficits grow in February. So the inventory level is decreasing day by day, week by week, month by month. New listings already trending well below pre-pandemic levels for months ran 27% below those levels in February, as potential home sellers continue to shy away from the market. What I just said, they are locked in. They're not going to get rid of that 3% historical low mortgage. They're staying put for the next 30 years of their fixed rate mortgage. All in all, total active for sale inventory is back to 47% below pre-pandemic levels after having recovered within 38% of normal levels late last year. Without a significant shift in interest rates, home prices, or household income, which is self-fulfilling dynamic that is quite likely to continue for some time. That's pretty much conclude my presentation. We're seeing trends. We're seeing positive trends. We're seeing people getting off the sidelines. So more competition in all, especially with the high cost. The Western region, in case you have not heard, California, Western region of the U.S., we're seeing price declines up until now. And the home prices are very high as it is. Because of the home prices are so high, many of the people are continuing to migrating into the Midwest and South and Southeast, especially South and Southeast, Texas, Florida. The two comes to mind because those markets are still have home affordability. So people going to move to those areas. Warm weather areas with still low cost of living, low home prices. That's what we're seeing. And so if the mortgage rate continues to be in the mid 6% going forward, we don't know if inflation subsides and the Fed will not going to raise anymore, then inflation subsides and all that, then we may see mortgage rate later this year dipped to closer to 6%. Right now at 6.3%. Inventory will continue to be low in order to incite more homeowners to sell. The mortgage rate have to be dipped down to the low 6s, even slightly below 6%. Then we'll see a whole bunch of housing frenzy. So that's my takeaway. So my takeaway is for primary home owners out there, you listen to this video, you need to get off the sideline. If you can afford to buy the home you want to buy, as long as you stay with your home for 7-10 years long term. Okay. So you'll be fine. Don't worry about the market volatility. If you can afford it, if you want to live in a particular place, then there's no reason for you not to pull the trigger. For real estate investors out there, you can still cash flow at 25% down. My investors, that's what I do. I help investors to buy cash flow markets in affordable areas in the South and Southeast mainly. Right now is the best time to pull the trigger before you see more competition to buy cash flow investment homes in those great markets. That's my takeaway. If you see value whatsoever in this video, please smash the like button and subscribe to my YouTube channel. I'm trying to educate more people. In order for me to do that, I need more subscribers. The YouTube algorithm requires that. So I'm way behind other people. I'm not a clickbait the negative headlines. I can't succumb to those immorality. Thanks for listening. And oh, by the way, also, again, please subscribe to my website below, drop your email into the form and become part of our network of investors. Once you join the network, you'll receive weekly market updates, investment opportunities, real estate education, and interviews with top industry leaders straight to your inbox. You won't find anywhere else. We help investors to invest out of state. This is our specialty. We connect you with experienced real estate agents in the Midwest and in great markets in Southeast. And they are the real estate agents in the local area that we network with. We have the hottest markets that we represent for cash flow homes. Regardless of where you live in the country, you can do this. We help you to invest in profitable cash flowing properties. And that's what we do. Thank you so much for listening. I will see you on the next video very shortly. This is Siwin. Have a nice day. Bye-bye.